Welcome to today's Daily Report Market Analysis videos with me, Richard, Perry Market Analyst at Hantec on Tuesday the 30th of June. It's been a slight slipping back of risk appetite this morning. We saw yesterday pretty decent move higher actually. Equities in the States did well, 1.5% on S&P, Dow 2.3% higher. Really did help sort of stabilize some of what looked to be building corrective sentiment, but it's not, certainly these markets are not out of the woods yet with regards to this potential rolling over of the market. And what we've seen this morning, futures initially higher today, now dropping back a little bit. So yeah, this little trend that we've seen developing over the last week and a half is still really there, isn't it? This negative move where lower highs, lower lows, selling into strength. It could still be the case. And this sort of moving towards more negative risk appetite recently has helped to stabilize the dollar. Dollar picks up and again sort of starting to gain a little bit of traction this morning, as we've sort of dragged back on euro, dragged back on sterling. These commodity currencies are both weaker on the Aussie and the Kiwi. So risk appetite really is sort of under a little bit of pressure again. Gold price, interestingly, holding on to that breakout, consolidating rather than sort of moving back with the stronger dollar, which is interesting. Treasury yields, little bit of a consolidation in the last couple of sessions, 3 sessions. Not a great deal of direction we've got at the moment, but certainly sort of moves are set up for more, I think, safe haven positioning to an extent at the moment. But it's interesting to see how this develops. Now, in terms of data point today, well, first of all, we've got Fed Chair Powell's testimony. That will be interesting. That's 5:05. He's suggesting that the US economy is sort of doing fairly well, but it's still very cautious. And I think that he's likely to, again, be very cautious in his testimony to Congress about how the US is developing in the pandemic emergency measures that the Fed has put into place. But also we're looking out for other Fed speakers as well. Fed John Williams, Lael Brainard and Neil Kashkari are all speaking today. Williams is centrist. Brainard just sort of hangs a little bit dovish, and Kashkari is predominantly dovish. So it'll be interesting to see again what these guys come out with today. In terms of data points, well, we've had quite a bit actually. Overnight we had the Chinese Pmi data. Official data for manufacturing 50.9. Now that was much better than 50.4 expected. So decent expansion there in June. Improving services as well, 54.4. So that composite PMI 54.2 in June. Yeah, it's not too bad, is it? That's a pretty decent rebound seemingly developing there. So that would help to stabilize to an extent risk appetite. But you've just, as I said, the markets haven't really taken that on board too much today. The UK GDP data, a little worse than expected, a little downward revision that we saw in Q1 data. We've also had the inflation numbers out for the Eurozone this morning. Now, headline inflation actually better than expected, actually picked up to 0.3%, but the core data did drop to 0.8%. Now, we did see some decent numbers out of Germany yesterday, so little sort of potential signs of bottoming in inflation, or certainly improvement in the June data anyway, but not so much on the core numbers yet on Eurozone inflation numbers. So into the afternoon, we've got the focus is on US consumer confidence really. Actually at 2 o'clock, before we have that, we've got the Case-Shiller house price index, which is actually expected to, pick up now. That's been slightly changed in the last few hours. It's expected to pick up slightly to 4% from 3.9% on house prices growth in April. We've had some decent housing data out of the States recently, so maybe that's not to be unexpected. But the consumer confidence numbers at 3 o'clock, that's 91.8 is the data there. Expected to pick up from 86.6 in June. But you've seen some pretty disappointing news flow out of the States with regards to coming out of lockdown, so maybe that number may not be as strong as it could be. So that pretty much leads me into my chart of the day, which is silver. Whoops, bit early for that. But silver, now let's have a look at the silver chart. And what we've seen is silver developing this recovery, obviously, since March. Now I've drawn in this this dotted line, which is a broken now broken uptrend with this sort of breaches, and sort of drawn in a slightly shallower uptrend now, but the market, I think, is still sort of positioning fairly well. Look at those stochastics, they are sort of ticking at a couple of week highs. MACD lines are beginning to bottom out. I think if the RSI can get above 60, I think this one becomes interesting again. That resistance at 1805, that high from last week, I think if you can see the market breaking above that, that really does sort of put pressure then on the 1830, 1840 area of resistance from the June highs. So it really does open the upside. I think a move above 1805, which was last week's high, certainly on a closing basis, that would suggest that the market is starting to find traction again. And if that were to be seen with the RSI above 60, well, that really does improve the outlook, I think, and silver. Now, you've seen gold, which is starting to, or trying to hold on to a breakout, and so in position more positively. Silver, a little bit more volatile than gold, but still looks to be sort of positioning again for an upside test of resistance. So with that in mind, let's. I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and click to watch our Trader Talks videos to gain some top trading ideas.